Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-magdi.com. For all trades, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW24, TSTWSY-S08, and the TSTWSY-S008 traders. Today is the 1st of June 2012, and the title of this video is Traders Talk Part 3. Okay, if you haven't watched Traders Talk Part 1, Part 2, you may do so before watching this part 3. Alright, in this video we will continue with our discussion, revealing to traders the most important knowledge they must have, critical awareness they must have, okay, and also strategy they can adopt, okay, understanding fully how the market functions, understanding other market players, okay, and how one can handle, okay, trading and investment like professional traders. Let's start part 3. Okay, I hope you have enjoyed the video that we titled Trader Talk Part 1 and Part 2. This is Part 3, and we are looking on the we are looking at the pound-dollar currency pair. As I show you this morning, I say to you, do not buy at the end of okay, the third area wave. Okay, because we are still expecting the fifth area wave. If you buy at the beginning of the third, at the end of the third area wave, you need to manage your trade carefully because we are still expecting the fifth area wave. Okay, so watch the part 1 and part 2 before watching this one. And as I explained to you, this is a good place to buy, not because on the 5-minute chart, because we are at okay, a hot spot trading zone on the edge. Right, touch this green line here. Touch it again here, touch it third time here, and today we are again at the same zone. All eyes, okay, are there. If you are trading volume, okay, you must find first the hot spot trading zone. That's where you are likely to see a valid signal and also high volume. The hot spot trading zone precedes, okay, the volume. Okay, trader will locate a valid hot spot trading zone, check the fundamental, and receive a valid signal to buy at a hot spot trading zone, and then you will see a long, okay, huge volume surge in that area. This is what's taking place here, and as the accumulation is taking place, it probably go ups and down for a while. As you can see, there was a consolidation in this session. The accumulation will take place, okay, in the hot spot trading support zone, and the distribution will take place at a hot spot distribution zone. And you can see the result, a movement very fast. So today we were here. You can see I told you we have 60 pip, and then there was another volatility, blah blah blah, to the downside to buy again because there are orders being filled. Now the orders are exposed. You see it come up big time. When you see it coming out like this out of the consolidation, you know that a lot of orders has already been filled. Now the public, okay, or the ordinary trader who were not aware of what was taking place here, the accumulation that was taking place here is now exposed. It does not mean that the trend will go out forever. Here we have taken some profit now. You must do the same. Take profit gradually, okay? Alright, so 60 pips, and then again from here to here, nearly 120 pips down from down here up to this level, okay? Very fast. From 15275, the price went to 15440. It's time to take some profit. So talking about a range, okay? Alright, some trader contact me about explaining to trader about a range. I will do that as I promised. I will talk about it in a future video. Alright, so this is what's happened today. Alright, now New York is open, ladies and gentlemen. Let's go now and watch Facebook, okay? Because we were talking today about Facebook. You can see some trader took profits. Okay, let's go now. As I explained to you, we go to the 50-minute chart. New York is now open. This is on the live chart, Facebook. So what I'm going to do now, as we are doing a lot of talking, okay, let's draw. Okay, I was showing you today okay, before New York is open, this channel is normal, all right, for the price, okay, to try to come back now to retest the top of the channel, okay. So you see now, break above it, retest it. So I'm expecting Facebook to come back into this zone, even to retest the low of 2683. Why? Why it has a high chance to do that? It does not mean that you will definitely do it, but there's a high chance. Why? Because this is 1 month gone now since this stock came on the market. So we have, for the first time, why I'm not seeing my whole chart now? Why everything squeeze here like this? I don't like this here. Okay, I'm still learning to master this, okay? Alright. So you can see that we have this is the month for May for Facebook. So this was the low, alright? So the market may decide to retest this low before bringing it up. That's a high chance. It does not mean that you will definitely do it, but there is a high chance that the market will prefer to retest the low of 2683 before, okay, bringing it up. We will see. We will see. But right now, we don't assume anything. All we are doing, ladies and gentlemen, we don't want to guess it, okay? We just want to get it right, okay? So we have our line ready. The channel is out of the bearish channel, okay? So we can't give priority to sell signal now, but it will be nice if we can come and retest this level and then turn around. That will give us excellent place to buy here. If you receive a signal in this spot to buy, that will be excellent place for us, because we are talking about low risk, okay, and value. Alright? Sometimes you may not, you may not enter the trade where you want to enter the trade. If that happens, you must use, okay, a tiny stop loss. As we are talking about trader stock, ladies and gentlemen, the first thing that we want to do is to limit risk. Alright? Talking about the most important things trader must know. One cannot control the risk 100%. I'm going to say this again because it's very important. One cannot control the risk 100%, but one can limit the risk 100%. Let me explain myself to you. Recently, we noticed that the JP Morgan has lost $2 billion. Okay, there were a lot of hedging activity taking place in JP Morgan to control the risk. I do not know whether their intention was to limit the risk or to control the risk, because I am for limiting the risk. How one can limit the risk? If one wants to limit the risk, one must, okay, determine, okay, the acceptable risk one wants to take. So, if for instance you have a $5,000 trading account, how much maximum risk can you take that you will not cry about it? Some may say to me, George, I can take $3,000 risk, which I think is crazy because it's more than 50% of your trading account. I will not take that. Another person may say to me, George, I can take a $2,500 risk, again 50%. You may say to me, George, I may take $1,000 risk. Another person may say, I may take $1,500 risk on my 5,000 trading account. But in that case, you must make sure that if you open 10 trade, 20 trade, 100 trade, it must not exceed your maximum risk that is acceptable to you. This is about limiting the risk. So for instance, if JP Morgan make that decision, it's up to them. So if they know they can handle $2 billion loss, that's acceptable risk for them. So everybody may be shouting and say $2 billion is too high, but if that is acceptable risk for them, it's okay. Alright? But in my view, in order to limit the risk, okay, one must determine first the maximum amount of risk one is willing to take, and one can cope with it easily. In my view, I can only cope with 5%, okay, risk. So this is what I say to traders all the time, okay? 5 out of 1,000, okay? 50 out of 10, okay? That's how we are doing it all the time, okay? So you don't want to, okay? You don't want to control the risk, but you want, okay, to limit, okay, the risk. So out of every $1,000, you are happy to risk only $50 out of, okay, $10,000. You are happy to risk only $500. Yeah, if you have 100,000, you are happy to risk only 5,000. Okay, and so on. 5% money management rules. So it works perfectly. Okay, and I'm learning from FSCM. All right. So it's very simple. It doesn't mean that I'm controlling the risk. Yes, I'm controlling the risk to a certain degree, but my objective is not only to control the risk, but ultimately to limit the risk. So if something wild, out of the blue came out, and they say to me, you lost, I will say to you, yes, I lost, but 5%. Alright? So you want to work it out, which one is suitable for you. Is it 10%? Is it 15%? Okay? Because a lot of retail traders come in with their saving money that they earn, and they will put everything, and they give everything back. Don't get into that game. Okay? I've done it myself. It's horrible, ladies and gentlemen. It's horrible. It's horrible. Alright? You don't want to do that. 5% money management rules. We are talking about risk. We are talking about high probability trades. Okay? And we want to control, but ultimately limit the risk. All traders and investors must limit the risk. You don't want to control the risk alone. You want to limit the risk. Put a cap on it. Alright? A cap on it. So you don't cross that line ever. You don't want to cross it. So if anything happens, you know that, alright, you know that this is what can happen, and you don't have any bad surprises, because whatever will happen, you know that it's not going to go more than 5%. As your account is growing, your 5% is growing, which means you have more money available for yourself to trade with. So if your account is going down, you know that, I have less money to trade with. Alright? You do not open another trade, even the high probability trade, if you reach your 5% rule. You want to work on that and stick to it. Very, very important. Every trade, use stop loss. Alright? Okay? And also, you want to enter a trade, be patient. Like now, I can decide to enter here. It may work, it may not work. But talking about low risk, ladies and gentlemen, traders talk. We want the low risk at the horizontal zone. If breaking above it, okay. If it's not going to come down, I'll wait. If it go without me, I'll look for another place. But so far, I'm not willing to enter a buy signal here. I will prefer it to come here and to give me a valid buy signal. This will give me a low risk trade, so I do not have to risk too much money when I'm in this trade. And if they take me out, I can look for another trade. Alright? Alright? In the next part of the video, we will talk about, the time distortion. This is about a market, talking about the divine nature of the market. The most dangerous distortion is the time distortion. When a financial instrument, is purely oversold, but for one reason or another is declining further, this is what we call a time distortion. On the other hand, when a financial instrument is overbought, for one reason or another it continues the movement to the upside, this is what we call a time distortion. The time distortion is different from the price distortion itself. When we see a time distortion, we know that there is a market manipulation taking place, and maybe a long-term, dangerous trading or investment is taking place. I will explain to you in the next video what is, a time distortion. Welcome again. In this part of the video, we will talk about another important issue traders must know. Alright? And the number one mistake that a lot of traders are making, is to forget to check the economy news. Okay, if you are wondering where you can find them, you need to go to either www.stochastic-market.com and click on economic calendar and then select the Forex Factory, and you may go directly to www.forexfactory.com. This is their website here. Okay, and today, traders, pay attention. The first week of each month, the first Friday, usually the first Friday of each month, we have what we call the non-farm payroll. This is telling us the job creation, in United States, and this is the non-farm employment change. You see the envelope here is red. I talked about this before, so this is it today. So remember, the first Friday of the month, we have a very, very important news. In fact, the first week of the month is a very challenging trading week because traders are expecting this non-farm employment change data. So the forecast was for the creation of 151,000 jobs, but we failed to miss the target of 151,000. In fact, they created only 69,000 jobs. The market reacted negatively because of this, but the recovery in the United States is taking place slowly, gradually. There will be some ups and downs, but the situation in the Eurozone is not helping the recovery in the United States. So the bearish sentiment in the Euro side is affecting the sentiment on the United States. So a bit of failure can be exaggerated easily. So you can see here, and people were selling the dollar very fast, and this is it. All right, so instead of 151,000 you have 69k. It's bearish, and most of the I'll show you what's happening now. So talking about trader stock, we want to check the news, and we want to know when the news will come and what impact the news will have on the market. The GDP data, the non-farm data, these are very, very important data, and you want to know that the non-farm payroll data will come the first Friday of the week, and the first week of the week is a very challenging trading week. Alright, very, very important, talking about trader stock. Because sometimes traders can trade, but they are not aware of those little things, and they get into trouble very, very often. And they keep repeating the same mistake, but because they're not aware of it. So next month, a lot like Friday like this, very often, what usually take place, you'll see in the evening. Sometimes I receive email from traders. They will tell me, Joe, this did this. I know straight away. And some traders see they have improved because they are not aware of the mistake that they are making, and they are adjusting, which is excellent. So don't repeat the same mistake over and over. All right, so this is it. So we see a big reaction for the euro. The euro suddenly wakes up because of the bad news in the United States, and also the pound dollar. And the USD yen was put down big time. USD yen is reaching a level that is a bit worrying, as I explained to traders in the past. The level we are talking about 7600 and also 4800 for the dollar yen currency pair. As you can see, reaction. This is on the 5-minute chart. We see all the way down. Since this morning. And the news was released somewhere here at 8:30 a.m. Eastern Time, 1:30 London time, and pew down. Alright, very fast, very, very fast down. Now there was another reaction push to the outside because some traders are buying the dollar for long term, so any move to the downside they buy. So there was another. So these are nasty movement down fast. So a lot of traders that leave their position open, and they didn't know that this news is about to be released. This very, very important news is about to be released today, and they will lose, especially if you are swing traders and you don't pay attention to this, and you don't manage your portfolio, which means you try to reduce your exposure, which means you have fewer trade open, before the news, you see. So some are taken down, some will take it up. So it's a really, really messy trading day. If you do not know, okay, that's very important news, okay, is about to be released. So www.stochastic-market.com, click on economy calendar and click on Forex Factory, or www.forexfactory.com. Always, even for the whole week, Sunday, check the whole week's news, know when the news are due, and every day. So beginning of the week, check the whole week, and each day check them. Think ahead, okay, that's what the professional do. Think ahead. If you need to make any adjustment, okay, do it, okay. Why you need to plan, okay, do not, if you have very important, you do not have too many trade opens, okay, you may have to close some trade prematurely, though you know that it will work, but you will have to close some of them because you don't want to have too many position opens. This is about trade management and being ready, okay, and managing the risk. But as I explained to you in the first part of this video, limiting the risk is very, very important. It's more important than controlling the risk. You want to cut it down to 5%, so if the worst did happen, you will only lose the 5%. But it's up to you. If the 5% is too much for you, you may decide to expose only 3%, okay? But do not get, okay? Do not just come into the market anyhow. Know exactly what is taking place, what other traders are doing, so that you too can make excellent, okay, decision, okay? Moving on again, I want to show you the Euro USD currency pair. And something is happening here again. What I was talking to you about today, do not sell, okay, at the end of the third area wave. You remember that? Talking about trader stock. This is one here again, alright? And we will draw again our area wave lines, okay? So we see that there was a kind of consolidation here, you see? All this morning, blah, 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 okay, in the euro. We are now on the 3-minute chart. I switch to the 3-minute chart because I'm looking at the, okay, the RTS 315, MACD 934.9, okay, and it's 8. I need to rectify the setting of this MACD. Talking about RTS 315, we are talking about MACD 834.9, okay, and stochastic 633. That's what I have here. Now for day trading and scalping, we can see that on this 3-minute chart, you see there was this first wave which breaks above the consolidation session here, and then we have this tiny, okay, second wave on the 3-minute chart, and then we have the long leg to the upside. This is the third wave, and as I explained to you today, a lot of traders will sell here and forget. Do not sell and forget here, alright, because this is the end of the third area wave, because we are likely, okay, to see the fifth wave. Very often the area wave traders will bring the price back to complete the whole cycle by displaying the fifth wave. So you don't want to sell at the end of the third area wave and forget. This is what I want to say to you. Do not forget when you sell here. So if you sold it here, do not forget, alright? So take some profit, come out. It may continue to go down. Sometimes you see, you just go down, go down, go down. You say, oh Joe, you told me to come out. But sometimes you do that, you go down completely. But very often the price will come back and display the fifth wave before changing direction. Alright? Alright? It may come back somewhere here before changing direction and go down. But because of the news that came out, so you see now, so I'm using the news, I'm using the area wave, okay, and I'm following also my 5% money management rules. It's not because I'm using one rules, then I have to forget the other rule or break the other rule, okay? They all work together in harmony, okay? So what's happening now? The job creation in the United States was below the expectation, okay? The market responded and bought the Euro USD and sold the USD yen. So they are bearish towards the dollar and bullish towards other currency pair in relation to the dollar. Alright? So now the price went up and displayed 3 waves. This is the 4th wave. We are now in the 5th wave. What a professional, what the best way to do, because everybody now want to buy the dollar, the euro dollar. They would use the Fibonacci tool. The first movement, you see, up to this level here, okay, and they will be watching the level of 61.8. Call it 70%. Alright, if you remember the core value, everything that we have talked about, talking about trader stock part 1, part 2, core value, call it 70% or 61.8, whatever. So try around very fast. They are expecting it now, alright, slowly but gradually to come back in this zone of 61.8% Fibonacci retracement level before they will look for opportunity to buy. It does not mean that they will just buy. They will look for opportunity to buy if the bullish momentum remain in place. Okay, I'm going to pause the video now, because I want to do something here, and I will come back to you in a minute. Okay, just pausing the video. Alright, let's continue. Thank you. As you can see here, I want to also talking about trader stock. So we don't want to repeat the same mistake over and over. We want to check the news and also be aware of the end of the third area wave. So, and also in the uptrend, in the downtrend, and the core value, talking about the IPO and everything that we have said before. Alright. As I promised you, I told you that we will talk about a time distortion, ladies and gentlemen, time distortion. And the time distortion is different from the price distortion, as I explained to you already. But it usually takes place when there is a market manipulation. This usually takes place. Well, now, recently there were some talks. I don't know whether this is true. Alright. Some of my fellow traders that are trading gold, and they thought that gold and silver price has been suppressed. Okay. If this is the case, ladies and gentlemen, alright, as they have said, my colleagues, there is a high chance that when the suppression has stopped, the price of gold and silver will go up. If, as I said again, if there is a suppression of the price after the suppression, which is the suppression is the time distortion, which means a financial instrument is either purely oversold or purely overbought for one reason or another. The overbought condition and the oversold condition has been suppressed by a group or a market participant for a long time. So, for instance, a stock reaches the fifth wave, fundamentals are weak, market conditions are poor, competition is piling on the company, but the stock continues to go up for one reason or another. All market participants are aware of the distortion, but though the price is supposed to go down, the price continues to go up, not for one day, but for few months or even for many months, which means a lot of money will come out of the market. Those traders that recognize the distortion will come out of the market and just wait and observe the market manipulators to continue to manipulate the market until they see a weakness in their position. Then they will come in and take the other side of the manipulation. This is about the time distortion. Alright? Some type of time distortion can be purposely done. Some are not purposely done because of the hedging activity in the market. Because, for instance, a trader may buy gold, and sell silver, or another one may sell gold and buy silver. So he knows that both metal may go in the same direction, but he does not want to take one side of the market, so he will buy gold and continue to sell silver. Though silver is bullish, he or she, for hedging activity, will continue to sell silver. Another market participant may buy silver and continue to sell gold. Though gold is bullish, he or she will be hedging his silver bullish position by selling gold. All sort of blah 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 in the market. As I explained to you recently, traders that are selling the USD yen are buying the USD card, and when they are selling the USD card, they are buying the USD yen. This is for hedging activity. So long-term hedging activity can create what I call time distortion, which means a financial instrument that is perfectly oversold or perfectly overbought. Okay, the overbought condition or the oversold condition can be suppressed, okay, for a long period of time. It can be done purposely or by hedging activities. Okay, you get the point now. Okay, so I also explained to you talking about basket trading, especially for those who are trading currency. I told you that the number one currency is the Euro USD. Is the leading currency pair. Is positively correlated to crude oil and gold. Very often, the correlation is not a science. Remember that I said it. Okay, so we don't use the correlation anyhow. But there are some traders, okay, that's a specialist of basket trading. So they will buy Euro GBP, Euro Yen, Euro USD, Australia Yen, Australia USD, all of them in one basket. Every day they will trade that basket of currencies. But sometimes the currencies does not move in the same direction, though they are positively correlated. There are times when they will go in a different direction. Alright? Alright? So by using too much basket trading, traders or market participants can create a market distortion, market exaggeration, even what I call the time distortion, which is a kind of a market manipulation. As I explained to you, not all time distortion are purposely executed in a market. Alright? I'm going to pause the video again, and then we will come back to you because I am trading and I'm doing the video at the same time. So I'm going to pause it again when I'm looking at some of my own trade here, and I will come back to you, okay, in a few moments. We are watching the Euro USD. As I explained to you, we have 1, 2, 3, 4. Very often traders will sell here and forget. You don't want to do that, okay? You want to manage it carefully and know exactly what's happening. It's better to have the fifth wave. At this point in time, before I pause my video, we will call this as our fifth wave. Okay, we are on a 3-minute chart. You can't expect too much miracle. Okay, 10 pip, 15 pip, 30 pip, that's all. But generally speaking, going to the mind of other traders, after a major news, when a market moves fast, traders would prefer it to retrace. But now we are on the 50%. You can see some traders taking profit here on the 50% retracement. They are happy to buy here. Some traders would prefer the 61.8% Fibonacci retracement level. Speak to you soon. Pausing. Okay, the video. Okay, thank you, traders. Let's continue. And now we are looking at the US Swiss franc currency pair, USD CHF. Okay, this currency pair has been overbought in the proper sense of the word. Overbought the whole week almost. Right here, you see, this is what we are talking about after the news. You see, you want to be aware of the news. You see, trader was selling here. You see this zone, trader was selling. You see all the the shadow, the sell here. They sold it here, you see the shadow sell. They were all selling here, and then as the news is about to be released, the price ran up first. So those people here, these bears are taken out of the trade first before the price went down. Ouch! All right, yeah, boom, up before. Attention on the news. Okay, what's overbought? So now, if you do not have excellent stop loss, or if you are not using an option, which means you buy a put option, okay, to sell this currency pair, okay, you are taking out of the trade. If you are just trading, okay, with a stop loss, or if you do not limit your risk using either put or call option, or using the 5% money management rules, see here, out. Okay, people were taking out first, and the price is going down. This is the opposite of the Euro USD. The dollar Swiss franc currency pair very often will go in the opposite direction of the Euro USD. Alright? Alright? So, very often. So what traders are expecting now, as the price went down, they will have their Fibonacci line drawn ready, and they will expect the price after the news, especially after the non-farm news. They will expect the price, okay, to go back to retest the 61.8%. Even sometimes you can go above. It does not mean that the price will stop there. That's what I'm saying to you. Always wait for a signal, okay, and come to the 61.8, and then they will sell it from here and let it roll it down okay, direction into the 127, 138, 150, 161% Fibonacci projection zone. If you want to know more about Fibonacci, go to www.dayprotraders.com. Alright, so this is what they will do. They will draw on their line. Many traders, currency traders, will be watching this USD CHF to rally up to the 61.8% Fibonacci retracement level, and then to give them a clear cut sell signal here. It does not mean that the price cannot continue the movement to the upside. They are just weighing their opportunity and the risk, okay, and the probability of a successful trade. Okay, so this is it. As I show you for the euro, we were expecting it to roll it down to the 61.8 and then to give us a valid signal to buy. If it doesn't give us, we will not enter the trade. So this is what a lot of traders are doing. At the same time, there are other market participants that will take the opposite trade. So though some traders want to sell here, as the price is approaching here, the contrarian traders may decide to buy because they are betting against these traders. They thought that these people are wrong, that though the news is against the dollar has a high chance as some smart money start buying the dollar at a cheaper price and to break above the 61.8 and even continue the day bullishly. On the other hand, those who are looking at the euro USD, though we were a lot of traders, okay, I'll go back now again to the 5 minute now. Though many traders were expecting, okay, as we see, we were expecting to come to a 61.8, which is somewhere here. This is on a live chat now. So some contrarian traders, the price approaching the 61.8, they know that a lot of traders will place order here to buy automatically. Some of them, without waiting for a signal to buy, they will trade the opposite side by here. Okay, instead of buy, they will sell. All right, they are allowed to do that. All right, so now you know it also. So you do not risk too much money, and if the signal has failed, you come out so you can protect also your trading signal. What I'm doing here, I'm just going into the mind of other traders, okay, to know exactly what they will do. Let's go now and find out what's happening to Facebook, Epic FB, okay, Foxtrot, okay, Bravo FB. That's the Facebook Epic, okay. Now I will show you. We go to the 50-minute chart. We have our bearish trend line, and I told you that, okay, the call price for Facebook is at 26.6. So if someone, okay, misses the first move, which is this one, see break above it, we will prepare it to retest the horizontal zone. As you can see, I didn't sell Facebook because I don't want to sell Facebook. Now I could perfectly sell Facebook here as this trader is broken, expecting traders, because I go into their mind and take, okay, a calculated risk, okay, tiny risk here, and sell it until it reaches, okay, my hot spot trading zone where I'm waiting for it. Alright, now if the price, okay, manages to get to my hot spot trading zone, I'm not just going to jump on it and force my bearish bias on it and say that you must go up by all means, but in fact I will just wait until I receive another valid signal at a hot spot trading zone, at least trend line being broken and the price turn around, something like that. That will give me a confidence, okay, to take this low risk trade. Trading at a hot spot trading zone, we are looking for a low risk, high probability trade. Alright, the decision shouldn't be made on the lower time frame, going to the 5 minute, 3 minute chart, doing something like this. But one must start first from the higher time frame, like weekly, monthly, yearly, quarterly chart, before dropping it down to, okay, a lower time frame. For Facebook, it's only 1 month candle that you will see. You can't see a quarterly chart, you can see, okay, the yearly chart. If you see a yearly chart, you will see only one piece only. You will see something like that. Let's go now, let's play with it. The yearly chart, I can't even see now, but there is something there, the data that we have so far. Quarterly chart, I'm not seeing anything at the moment, okay, but it's there. You can see weekly because okay, we have few weeks, because it's a new company that is listed recently, okay, on the market. All right, okay, you see now. So I'm going to pause the video again, all right, and we'll see whether it will slowly but gradually come to our hotspot trading zone. As myself, I'm busy with other things, okay, here. All right, so I will speak to you very soon. Pausing the video. Okay, traders, here we are again. All right. Talking about traders talk part 3. We are looking at the pound dollar currency pair, and this morning, okay, I draw some line which I remove now. I started drawing this trend line first, if you remember clearly. Okay, and I was telling you that it's quite wide. Talking about traders talk part 1 in this session here, this point and this point, we say it was too wide, and we draw another trend line here. Okay, this one here, you see the second one. If you like, we can color them in a different color. This is what we are doing. It was a bit messy, so I decided to draw different line now. Okay, so the green one, that's what we were using, and then we draw also a channel here like this, something roughly a channel like this. You remember that? Okay. Alright, what I will do again, I will color that also into green. Alright, by the way, if you are new to us, we are the TSTW24 traders, and we can see that the price came out of this bearish channel first, went above it, you see, and then retest it here. Hope you can see on your chart also. Alright, break above the bearish channel and then retest it here. Alright, here we were counting the wave, and we counted 5 waves, and I was explaining to you the mistake that a lot of traders were making, and I will do them again, okay, very fast, okay, and not to buy and forget at the end of the third wave in a downtrend, because we are still expecting the 5th wave, okay, to come in, and then the price rolling above, break above it and retest it. Now you can see that the market did not forget this second trend line here. You can see this second trend line. Price went again above it, this second trend line. You see what it did? It break above it and retest it here. And deep below, you see how the price came back and retest the second trend line here. Alright, though we are on a 5-minute chart, we can the price respecting, okay, the trend line, and from this point onwards, okay, so the price now is break above this, okay. I can call this one, if you pay attention here, I'll leave it like this. So we can start again counting wave in this session. It was a messy one here, not a beautiful one. So this is our first wave, okay, second wave, okay, and the third wave. And you don't want to sell and forget at the end of the third wave, because if you sell, you are in a 4th wave. And be aware that the 5th wave is here underway, which is the last one here, you see. Now we come here. Now professional, because they count the wave, believe me, the professional count the wave, and you must also count the wave, okay? www.24area.waves.com. Learn to use the area wave in a practical manner. Do not just learn it by heart and know everything about area wave, but learn to use it, okay, in a real time, like I'm showing you now, so you can make excellent decisions. So trader, we prefer to sell here and forget, so to speak. We don't forget, you have to manage it and let it roll. As it's rolling it down, because we have a very important news today, that's what we are talking about, attention news. Trader will use their Fibonacci tool and draw it up to the top here, and they will expect it, as I show you for the Euro USD and the USDC shelf, and expect the price slowly but gradually to roll it to this level of 61.8%. Does not mean that will definitely go there, but there's a high chance that slowly but gradually they will force it. The Fibonacci traders are very, very demanding traders. You have to know how these people trade, talking about other market participants and paying attention to them, not showing any, okay, disrespect to them, even if they are crazy or dangerous traders, as I like to say, call some of them, okay. Paying attention to them, they will prefer to roll it to 61.8 instead of 50% before taking it up. It does not mean that it will definitely get there, or when it gets here, it will definitely turn around. Alright? Okay? It makes sense. It makes sense. Okay? Alright? So we're going back again. We look on Facebook, because we are watching Facebook. Okay? We don't want to forget Facebook. Excellent company. Alright? So it's still lagging to come to our okay, the low risk zone. This is sometimes happen because other traders are coming to the market. They are watching some levels here. You see this support level here. All right, some traders will prefer to buy there. Don't be like them, because sometimes other traders will force you to do something. Stick to your method, okay? Stick to your method. You want to get in at low risk. It's not because it's turning you're going to miss a chance. If you miss, so what? You want to look for another opportunity straight away, okay? So don't get into this game of I miss opportunity. So what? You will get another one. Plenty. You will get plenty opportunity, okay? Just say to myself, if I miss one, I'll get 5 back, okay? If that makes you happy, alright? Just say, if I miss one, I'll get 5 back, okay? That will keep you happy at least, alright? So if you're feeling bored also, play games, okay? Go to, okay? Google Play Shop, okay? Download some basketball. I have some basketball on my Galaxy Note, which I play non-stop, alright? And the basketball, I like it very much because the net is the goal and the ball, okay? The net and the ball, you just play it, okay? So play some games if you're feeling bored, so you can avoid just jumping into trade because you're feeling bored, okay? Have some games on your smartphone, play them, alright? As you have your left hand side eye watching the screen, you use your right hand side eye watching the game, okay? Alright, if you can do that. Alright, okay? So though they are trying to buy here, you don't want to follow them, okay? You want to stick to your method and wait patiently. If they don't allow you, just wait. Sometimes you will see the power will go, like you pretend to go like this, you miss, and only to see it come back down to exactly what you expected it. And as a patient trader, you will enter at a low risk point, which is gorgeous because you want to be a low risk, okay, and a high reward. That's what you want, okay? That's what you want. So it's taking a bit of time for this to come to this level where I'm expecting it. This is the Facebook stock. We are now on the 5-minute chart, okay? So it's taking a bit of time, but we just need to be very, very patient, okay? Another stock we can look at, this is a RIM stock. Traders are selling RIM like dogs, like crazy traders. Alright, now today again gaps down, blah 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 blah. Just keep eye on the ball, okay? Do not be overwhelmed by other traders, okay? But try to analyze the price, okay, step by step, okay? Step by step, taking profit consistently, okay, and managing, okay, the risk. Bring it on again the Euro USD, because this video has been a bit too long now. I'm thinking to close it now, okay? There are more to be said, okay? But one thing I will say before we close this video: traders should remember that big orders are filled bit by bit, okay? All right, bit by bit. So the first hours or the first 30 minutes when the market is open, brokers will fill orders, okay? So investor will send orders to their broker to be filled. If these are big orders, especially mutual fund, pension fund, hedge fund that have orders to be filled, huge orders to be filled, it takes time to fill all these orders. So the price will be oscillating. So remember, big orders are filled bit by bit. As this is taking place, you see the price will go up, down, up, down, up, down. When accumulation is taking place at a valid support level, and when a distribution is taking place at a valid resistance level, okay? Ladies and gentlemen, I hope you enjoy all this video about trader stocks, part 1, part 2, part 3. That you have learned a lot from it, that you will put into use, okay, to become a better trader. Thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders.